Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for December 21st, 2009. This is Patrick Ceresna. First off, I'm going to take a look at the S&P 500 using that SPDR exchange traded fund symbol SPY. Over the last many months, we've been looking for a market top to develop around this 110, 112 zone on the upside. It has acted as a formidable overhead resistance. We now are tightening that to the 111, 112 zone because it's clear that the major overhead resistance and congestion is all occurring up along there. At this point, we still have no confirmation that in fact a market top is in place. We only are seeing that overhead resistance acting. We've been very range bound for over a month now, and we're looking for a resolution to either the upside or the downside. At this juncture, we continue to favor that downside breakdown because there's no evidence that the market has the strength or the conviction to make a higher push. But for us to have any conviction behind that outlook, we need to first see the S&P break down below this 109 to 108.50 area marked by that blue zone. If we have a technical breakdown below there, that's when we can start to potentially see topping formations develop in the probably the first few weeks of January. But at the same regards, if we never do technically break down or at least hold down below there beyond a day or two and the market pushes back up, we can't rule out a thrust up to the 115, 116 zone. So we're waiting for the break of the zone, but we are definitely looking out for the breakdown. Next here, I want to take a look at the ISE Regional Banks Index, which is the symbol JLO. And the financials over the last half a year have really had no conviction to do anything in terms of the regional banks. And essentially, we've seen this rising wedge kind of work its way back up to overhead resistance. And now we're seeing technical reversals on the downside. There's no evidence that the regional banks are going to dramatically break down just yet. We can only be suspicious of it. But more than likely, the 18.5 to 19 support along the bottom side should at least initially hold any or contain any selling at this juncture. But in the bigger picture, over the next few months, we may be seeing a profit-taking cycle come in here that has us test lower levels. Next here, I want to take a look at the ISE Syndex, which is the symbol SIN. This is the index of all the casino, tobacco, and distiller companies, and we've seen a lot of relative weakness in this sector beyond a lot of the other sectors. And we had a rising wedge that we talked about a few weeks ago that is now technically broken down back down toward our 90 to 100 focal point, just missing it by a few cents. At this juncture, though, we still favor continued weakness. We think that at some juncture, whether it's at that 98 to 100 zone or if it comes a few dollars below in this zone over here, there should be some sort of a bounce in the Syndex, but that bounce is probably only another shorting opportunity. So we are looking for this first move to finish off somewhere in here and then subsequently get a little bounce. Next here, I want to take a look at the Home Builders Index, which is a symbol RUF. We had a very nice bounce off a key support line along the 875 to 9 focal point where we're looking for support to come in. At this juncture, I would be very skeptical of any sustained rally at this juncture. More than likely, we will just see a flagging formation. And so long as all the rallies are contained to the 9.5 to 975 area, it is actually quite possible that we'll probably see another wave lower after the completion of this corrective wave. Next here, I want to take a look at the ISE Natural Gas Index, which is a symbol FUM. At this juncture, we had a failed head and shoulders pattern breakdown and subsequently a break of this descending trend line with a very strong thrust, including a recovery in the natural gas commodity itself. At this juncture, this is a bullish break on the upside. At this point, what we're looking for is to see whether or not we have a little bit of a sell-off, and when that sell-off occurs, if we see support coming in and no major technical selling occurring there, we'll be looking for that to turn around and thrust all the way back up into the 112 to 114 area. Next, I want to take a look at the ISE Mini FTSE 100 Index, which is the symbol UKX, and the UK market has also been rejecting at overhead resistance levels at that 530, 540 area. We're going to be watching that support line around the 520 area, give or take, and if we have any technical breakdowns below there, it will open the window for retesting back down into the 495 to 500 level. In the same regards, though, if those support lines do hold, we can't rule out further range-bound price action for the remainder of the year, and also any technical breaks above 540 will open the window for at least a short-term thrust all the way potentially up to 560. At this point, we're going to have to let the market make its cue and show us which direction it wants to head, but we're definitely on warning here for a potential breakdown. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.